Good day, good morning, good afternoon. Just thank you for joining us. My name's Tim Watts, like the light bulb. I'm a annuity sales director over here at Insurance Agency Marketing Services. I'm joined by Jake Brunton, also a annuity sales director over here at IAMS, and Brent DeGroot from One America. We've got an exciting presentation today that I think is going to be a huge hit. And if you haven't looked into annuities with long-term care enhanced payouts as an option for your clients, this is a definitely a great product to add to your toolbox and to be able to help your clients out. Before we get into all of that, we are going to give you a few different slides on why agents love working with us over here at IAMS. We'll have, of course, opportunities for you to ask questions. Just put in those questions as they come up in the questions box, and we'll get those answered for you either during the presentation or at the very end. Additionally, we're going to have 4 polls for you here today. We'd love your feedback and participation on that. First thing I want to highlight today before I turn this over to Jake is we love to take care of our agents. One of the ways that we do that is help remove frustrations by no dial by name directories. You don't have to worry about any extensions over here at IAMS. We're going to get that phone answered in 1 to 2 rings by a experienced employee over here. Our goal is to get you taken care of on that first call, if not just with 1 transfer. But this way you don't have to worry about leaving a message for some a person who's on vacation to Tahiti for 3 weeks. It just adds a lot of great customer service, great way to start off your relationship with us over here at IAMS. I'm going to go ahead and kick it off over to Jake. He's going to give you some information about some amazing programs that we have over here at IAMS.
Well, thank you for that introduction, Tim. Again, my name is Jake over here at IAMS, Annuity Sales Director, and I'm going to be starting us off today with our new producer builders. And for those of you who are new to us at IAMS, these bonuses are available based on your production level in your first 180 days of contracting with us. We have great levels that you can qualify at, and as you can see inside each level are some great options for you. We've got incredible business building tools, personal perks for you, and even cash rewards available. If you would like to know where you stand towards your new producer builder, if you would like to have a conversation about how to achieve that next level, please don't hesitate to give Tim, I, or your sales director a call. Another business builders program we provide for our agents is our referred producer program. I see a couple advisors on with us today that have already taken advantage of this program. Our business on the wholesale side of the industry is similar to yours in the field, that in one of the best leads we could ever obtain is a referral from one of our valued producers. This is why we want to make it your worthwhile to refer a producer to us. That being said, when you do refer a producer to us, they get contracted. We're going to cut you a $50 thank you check. And now where the real money comes in is as your referral rights business, you're going to receive an override on that business. Our ownership team, Charles, Steve, Curtis, and Chris, they sign checks for thousands of dollars every quarter. And with that being said, if you can think of anyone that could benefit from doing business with our team, please don't hesitate to put their information into that questions box, or you can certainly email me, Tim, for that information. Below that is our marketing reimbursement program, which is our most popular program that we offer over here at IAMS. For every $100K in FIA premium, you're going to get $100 in your marketing reimbursement account. Why this is so popular for our advisors is that we truly do consider this to be your money. You're going to have the flexibility on what services, when, and who you use these funds with. It is your marketing reimbursement, so we're not going to tell you the vendors that you have to use. We do recommend vendors that we partner with and leverage reduced rates for that preferred service. We also have our creative team to create a marketing strategy and provide in-house services. If you'd like to know how much is in your marketing reimbursement account or have a conversation about how to utilize it, give your sales director a call at our office. We're going to love to speak with you about that. Now going on our back office support, this is another way that we add value to your business. This is the core of IAMS and how Charles Hearing founded us years ago in 1986. We're going to help the independent advisor work smarter, not harder. We are going to do that with our great business building tools and resources. Of course, advanced case design and assistance with life and annuity quotes is an area that we assist with. We're going to get you those illustrations that you request within 24 hours. And to be completely honest, you're going to receive those within, usually within the hour. Submission to commission support is handled by our new business teams. Mackenzie heads up is on the annuity team, and Michelle is the head of the life side. They have fantastic teams who work tirelessly every single day to help you get commission quicker. We're going to scrub those applications, submit them on your behalf, and do the administrative tracking, as well as get you updates on those cases as needed. We do this to ensure that you do get commissioned as quickly as possible. This is a service that we provide to our valued producers and how we help grow your business by keeping you in front of clients while our team handles that back office support for you. Our website, also known as our IMES portal, this is going to be a great tool for our producers to use and another reason to work over here at IMES. Once you are contracted, you're going to have full access to everything that you see on this slide and so much more at imesinc.com. If you haven't registered for our website, it is very simple to do so. When we're done with this call, go ahead and create an account. We'd love to see you on there if you have not done that already. A lot of great resources are available to you, including illustration tools, online forums, product grids, and product news. Industry updates are also out there for you as well to leverage. Technology is where the industry is going, and Luma is our newest partnership to streamline the application process. Most of our carriers are now on our Luma Firelight eApp platform, so you can go to one site to submit business. It is COVID friendly, and some carriers are going to eApp only for some of their product lines and will also offer extra comp for utilizing the eApp platform. Make sure you get with your sales director before you submit a paper app because you can certainly earn more by doing the eApp in a lot of situations.
Hey, Jake, one quick thing here on Luma. If you're an agent with IMES and you've sold business, make sure you reach out to your annuity sales director. Luma provides us with live feeds of current contracts that are in force, so we can get you contract information without you having to call the carrier. It's a great way to take a look at your book of business to see if there's some underperforming annuities that could benefit from the high rates, caps, and huge bonuses that we have. Or I've seen some agents that didn't realize they had clients out of surrender and funds were just free and clear to move as needed. So if you've made sales with us already over here at IMES, make sure you understand how Luma can also streamline and make your job more easy to do. Sorry about that, Jake, but just wanted to highlight the Luma and that new feature.
Yeah, no, certainly. Thank you for pointing that out, Tim. Certainly, it's a very lucrative feature with our Luma Firelight platform. Okay, yeah, so going on, we do have a full in-house creative team. We can help you help your practice, and a lot of these items are turnkey and available out there for you. Many of our sales resources are white labeled, so you can simply impose your contact information and your business logos onto it. Speaking of your logos, agency solutions is our expertise for our team. So if you haven't created a full customized brand for you and your agency, we can certainly help you out with that. This is going to assist you with name recognition, which grows your natural market organically. And then lastly, digital marketing solutions are a very popular topic around here at IMES. We can help you with websites, social media marketing, email marketing, and much more. The internet and social media sites are where the overwhelming majority of prospects go to for information. Make sure that these are accessible and represented in those marketing lanes. It's going to be very beneficial to growing your business. Reach out to myself, Tim, or one of our sales directors. You can always give them a call when this webinar concludes to talk to them about how you can access IMES Creative, and we can certainly get that ball rolling for you. Now, going on to our next slide, I'm going to launch our first poll for today. So thank you for all of the participation that's going to take place. Let me just get this launched right here. And there it goes. So yeah, it's asking if you have a documented 2025 marketing plan in place this year. And again, thank you for for all of the responses. Right after this, I'm going to go into customized marketing analysis that we provide to all of our agents here at IAMS. It is complimentary, and we are going to do deep dives into your current marketing strategies today and how we can help you help your practice. Well, thank you for all of those responses. I'm going to go into now what you can see on the screen, which is our complimentary marketing analysis. And for agents looking to explore new sales ideas and programs, whether you're new to the industry or a seasoned producer, this free assessment can help you boost your business with insights on your website, digital presence, branding, and current marketing activities, as well as recommendations on trusted vendors for everything from lead generation to seminars and social content. Reach out to your sales director to get started at any time. And that's going to end with all of the information I have for you today. I'm going to kick it back on over to Tim.
Thank you, guys. Hey, we founded IAMS Wealth Management 6 years ago now. What we've done is grow this division at IAMS very organically. We've helped advisors become IARs and pass the Series 65 at a very successful rate. Once we have you registered, we're going to bring great value to you and your practice with an incredibly competitive fee structure for both you and your clientele. You're also going to enjoy an amazing technology and investment platform. This has been a major growth sector for our business, and assets under management could be a major growth sector for your business as well. Next, we've got our life and annuity academies. We're going to likely have about 4 of these this year. Let me go ahead and launch our second poll here, and that is, would you like some information on our next annuity and life insurance academy? So real quickly here, our next one is going to be June 4th through the 6th. I know SILAC is going to be one of the carrier sponsors. There may be another sponsor to add there. We do cover all of your expenses, including travel to the event, cost of the hotel, food, meals, all of that good stuff. And then where the real value comes in is with 20 presenters going over 3 main buckets, marketing programs that other agents are having huge success with, sales strategies to teach you new and innovative ways, including One America, getting you in front of long-term care clients and positioning an annuity for that solution. And then, of course, we do have product deep dives as well. Again, we do cover all of your expenses, but where the real value comes in is with those 20 presenters that we're going to bring in and the help that that's going to provide to you and your agency to hit and exceed those revenue goals. I'm going to go ahead and close that poll. Thank you for everybody who voted on that one. Go ahead and advance that slide for me, Jake. All right, we are wrapping up qualification for Trek to Quebec. This does end June 30th, and we're actually in quarter 2. So at the end of this quarter, qualification for Trek to Quebec will end. We also have qualification for Cap Cana in Dominican Republic. You still have several months to qualify for that one. That ends in December 30th of this, or December 31st of this year. Additionally, just announced by our president yesterday, any production with a MIGA, so this is a combo between a MIGA and a FIA, is going to count as double production for both this Trek to Quebec as well as our trip over there to Cap Cana. So get those double credits in while you can and qualify for one of these trips. Next and last slide here for me before I turn it over to Brent is, if you haven't followed us on LinkedIn or Facebook, definitely go over there and do that. That's where you can get great product updates, industry insights, as well as any other alerts that we want to give you a heads up on. Well, Jake gets the presentation over to Brent. I'm going to launch our third poll here, and that is, have you ever sold an FIA with a long-term care enhanced payout? Love to see the participation here. Want to see, just kind of in the room here, do we have folks that are experienced with this type of a product, or do we have some folks that are jumping into the waters for the first time? Got some great participation here. I'm going to give it about another 10 seconds just to let everybody get that vote in there. Right now, we're 55-45. Oh, we're 50-50. The votes keep coming in. I feel like I'm a sports announcer here. All right, Brent, just to let you know, I'm going to close this poll. We are 50-50 literally with the group that we have on board today. 50% have sold and 50% have not. So go ahead and bring up that presentation there, Brent, when you're ready. Awesome. I'm seeing your screen.
Excellent, excellent. Thank you, Tim, Jake. That was great information. You know, I've been working with INS for years now, and I think I'm close to 100 webinars with you guys. And it always, I'm always stunned by all the great tools and so forth that you have for the advisors that work with you. So kudos, great job. Keep up the good work. So, but thank you. And thank you all for joining us today. And I really wanted to talk about really some adaptable annuities. You know, I think most of you are very familiar with the marketplace and working with your clients, and, you know, whatever structure that you have, if you're laddering annuities, if you're just, you know, doing, you know, full comprehensive plans, all of that sort of thing. But I really wanted to make sure that you're aware, and I love this kind of picture, if you will, of this chameleon, right? So adaptable annuities, obviously the chameleon can change colors to whatever, you know, the situation arises, or what the needs may be in order to protect himself. Well, adaptable annuities are the same way. So, and I'm going to really be talking about exploring the tax benefits of the Pension Protection Act, and we'll get into that here in just a little bit, and certainly Section 7702B of the IRC, the IRS code. So thank you all for coming out. I do want to certainly start with talking a little bit about One America, because I'm going to give you some great solutions, you know, and quite honestly, if you can put a long-term care plan in place with no new premiums and no surprises, would that interest you? I hope it will. I hope that's why you're here today. So I wanted to talk about One America just in and of themselves, so that you're understanding when you're representing maybe any of our solutions to your clients, who you're dealing with, who you're making those promises to. So we have been an asset-based market leader since the beginning. And I know this slide says 35 years of asset-based leadership. We are actually 37 years now into creating these types of solutions. So why is that important? Well, first and foremost, we've been thinking up and designing these types of plans, right? Then filing them, then administering them, and most importantly, paying claims. And as a matter of fact, when you look at 37 years in the asset-based LTC marketplace, we have some claims that have been around longer than some of our competitors. So one of the first to offer these types of solutions, and it's arguable that we are the first. And so just really wanted to pass some of that information along to you as well. We are a mutual holding company. You can see the financial strengths there, 95 Comdex, A+ rated from AM Best. So have all of the high ratings that you're looking for from a company. We've got probably the most flexibility as it stands today in this asset-based market area. So we not only have a whole life chassis, but we've also got an annuity chassis. And that's really what I'm going to focus on today, and some great opportunities that have gone unnoticed for many, many years. We offer lifetime protection. We're the only asset-based carrier that has that. And we can do joint coverage. So put two people on one policy, affording, you know, like a second to die type situation, which really helps drive a little bit more in benefits for them. And then we've got a lot of flexible ways that we can fund these solutions. Now, lastly, we're based in Indianapolis. We've got, you know, a team of 30 wholesalers. I'm included in that. And we've got some that are what we call our advisor assist program all around the country. And these are there to help you with any point of sales type situations, maybe consumer educational seminars that you want to do, you know, just agency trainings, things of that nature. Of course, IAMS is your first place to go for that, but just know that we've got the support all around the country for that. And the last one there is our claims benefit concierge. I just want to tell you, we get a lot of great feedback, but I'm going to go into that a little bit further here in just a moment. So the other thing that I really wanted to make sure is that, yeah, look, you've got a picture of who I am here and my contact information. And then my internal, Adam Frechette, is always available to you as well. Again, I will always say that IAMS, your marketing person there at IAMS is always the best place to start. But if you have something that, is you just want to contact the company directly, I just wanted to make sure that you had our contact information as well. All right, so let's talk about the concept of a deferred annuity with LTC benefits. Now, here's a very well-balanced portfolio that you're seeing on the screen, right? So you're aggressive that are meant to, really grow their overall portfolio, but comes with a lot of downside risk. Your moderate funds, which, again, poised for growth, but not quite as much risk. And then your conservative funds, which are really there for preserving capital. And essentially what we're doing with the concept of using an annuity with LTC benefits is just repositioning a portion of that portfolio. So we'll just take a portion out and create leverage around whatever that annuity amount is. It could be 2, 3, 4 times, just depending on what you're looking for. Or we even got that solution, and I mentioned this early on, that it would cover them for a lifetime. So whether that's one person or 2 people on that policy, we can create solutions and leverage up to a lifetime of their need. So they would never run out of benefits from their policy if that is something that they desire. So really some great solutions here. Now within our annuity suite, we actually have 3 different solutions. We're in the process of really trying to simplify this, maybe make it a little bit easier, not have so many product iterations, if you will. All 3 of these came out at different times in our history. So if I'm going to focus on 2, I'm really not going to go into all 3. I just think that's overkill. But I'm really going to focus on 2. And the last one there, the indexed annuity care, is certainly an opportunity that I think is one that I am recommending most and really highly encouraging to look at. And certainly when I talk about, putting a long-term care plan in place with your clientele with no premiums and no surprises, that is really the solution that I'm going to be using there. Now, if we want a little extra underwriting, Annuity Care 2 is a great solution because this is your straight leverage play. And I'll get into that here in a minute as well. So just know when I'm looking through or working through this presentation today, excuse me, I'm going to be focused on those last 2 that are there. All right, so much like a retirement portfolio, right? Annuities also have 2 phases. You've got your accumulation and growth. So when you represent an annuity to your clients, right, they're putting in dollars. Many times they could be after-tax dollars, so a non-qualified annuity. Of course, there are qualified annuities out there as well, but really what we're doing here is letting those grow over time. And we know that once they get out of surrender, it's time to look for, hey, what's the best rate out there, right? So you're working with your clientele, again, whether you've got a laddering strategy, whatever kind of strategy you're using with annuities, but you're chasing that next best rate. So every time they come out of surrender charge, it's time to look for the highest rate that you can get for them to grow that money. And that's exactly what the client's looking for. That's exactly what your job is to do, is to help them grow that money. Well, that's the accumulation and growth phase, right? That's the first phase of that. Well, eventually we come to a phase, and that's typically later in life, right? That they've got to have the payouts or the distribution from that particular annuity. And when I'm talking about a non-qualified annuity, we have all this embedded gain. So all of this growth that was tax deferred. But here's the problem. When they get later in life and they start to realize, okay, now I'm going to start using that for whether it's income purposes or, many times they don't even need it for income purposes because the rest of their portfolio is doing so well, right? Now they look at that annuity, especially these non-qualified annuities, and say, oh my gosh, look at that, all that embedded growth, that is all taxable when I start to take distributions. So what really they are looking for at the end of their lives, maybe not the end, but when we're getting up in age, if you will, is really a tax efficient way to access that distribution in that annuity. And that's really what I'm here to talk to you about today. But before I get into that, let me give you some quick facts and figures. I'm going to go a little bit off screen here. Do you know what happens January 1st of 2026? A little bit of a rhetorical question here because we're in a webinar setting. But the first baby boomer and 10,000 of them will turn age 80. Not only that, every day after that, we've got baby boomers turning 80, 10,000 of them every day. Why is that important to know? Well, largely the long-term care industry for many years has said the average claim age to start a claim is between 80 and 85. So if we know that this silver tsunami is coming, with the boomers, the largest generation out there, if they're now going to be turning 80 in less than a year, we've got this huge silver tsunami that's going to be drawing on needing care, or at least trying to plan for care very quickly before they do need care. So really knowing that, again, this huge silver tsunami is coming, I want to give you a very simple way to plan with your clientele for a tax efficient distribution model and providing them some long-term care services. So yeah, now this stat here is a little bit old. It was 2023, $385 billion were sold in annuities in 2023. I think it was 408, if I'm not mistaken, in 2024. So this market is huge, right? Annuities are very much a big portion of people's portfolios, if you will. So just know that it's a huge opportunity out there. But let's remember, why a consumer buys an annuity in the first place. And Gallup poll, hopefully you've heard of Gallup. We've got there's a big building downtown here in Omaha where I'm located from Gallup. Now I know that that's not the only place, but Gallup does these polls every other year on non-qualified annuity owners. And they asked them a couple things here. How did they intend to use their annuity? And so there are some very interesting statistics that came out of that. 84% said that they wanted to use it as a financial cushion if they or their spouse kind of outlived their life expectancy. So is that extra income just in case, right? So the what if scenario. 79% said they wanted to avoid being a financial burden to their children. 67% said they're going to use it as an emergency fund or for catastrophic illness and nursing home care. And if I look at all three of those examples, quite honestly, all three of them tend to say, I'm going to use this likely for some extended care needs later in my lifetime, probably in retirement. So if all three of those stats talk to potentially needing long-term care, now it's just the availability of how to do that in a tax-efficient manner. So moving on, so let's just say your client needed some long-term care services. And for every dollar of LTC expenses they have, they've got to figure out which bucket they're going to pull from, right? So they can do their IRAs, their qualified funds, if that's the case, but really they're going to pay $1.30 for a dollar of care. Is that the best use? I don't really think so. It doesn't make the most financial sense. How about non-qualified funds? You're going to have taxation in those as well. And this is a fairly conservative stat, but it's going to cost $1.15 for every dollar of expenses that you need. Is that the most financial? Not necessarily. We can look at cash and they can just pay it on a one-for-one basis. Yes, that can happen, but is that the most financial, economical, if you will? So really the most efficient and effective way is to insure that risk. So to pull it from another bucket that you will help them create, and that's their insurance bucket. And again, a pretty conservative amount here at 33 cents for payment for every dollar of those expenses. but I really wanted to show kind of how the Pension Protection Act can allow you to work with your clientele on a much more efficient and effective basis. Well, enter the Pension Protection Act. I mentioned this early on. So it was written in 2006. It was enacted in 2007, but not put in place until 2010. But it's now 2025. So the Pension Protection Act has been out for over 15 years. There is a specific act within the Pension Protection Act. Look, that largely did with pension reform, right? The act itself. But there was a specific section, Section 844, that dealt specifically with annuities and long-term care and a new tax advantage to using those. And that's really what we're talking about here today. So this has been around for 15 years and it's largely unnoticed. So what am I talking about? Why is the PPA important to us when working with our clientele to put a long-term care strategy in place? Well, you've been working with your clients for years, putting annuity contracts in their portfolio. But here's what happens. I mentioned this early on. They grow all tax deferred. You're growing the money, chasing that rate, doing exactly what you need to do for your clients, and the clients love watching that money grow. Here's the problem. When they start to get to in upper age, advanced age, they start looking at that and seeing that, of course, it's more of a tax liability than an asset for them, because every dollar that they take out of that annuity will now be taxed, and it'll be taxed in multiple ways: federal, state, provisional income, Medicare premiums, IRMA. You may have heard of that as well. All of that could affect the dollar that they're taking out, or any dollar, I should say, that they're taking out of that annuity that is left by itself. So not only are they concerned because it's a tax liability, but they're also concerned at an advanced age about, gosh, what if I need any extended care services? Well, I'm going to give you an opportunity to, one, help your clients mitigate taxes, right? Every client wants to pay less taxes. Nobody wants to pay more, and put a long-term care plan in place doing so. And what do? We utilize the Pension Protection Act and do a 1035 exchange from the existing non-qualified annuity that they've got and move it to a Pension Protection Act annuity. So very simple. A 1035 exchange just says, fill out this application. There are Pension Protection Act annuities. All of ours at One America are PPA annuities. And in order to be a PPA annuity, a couple things had to be in place. It has to have some language around IRC, the IRS code 7702B, and it must have some form of underwriting. But I'm going to try and make this as easy as possible for you. Again, you're working with annuities with your clients. Really, you largely don't have to deal with underwriting, right? So I'm going to show you a way. We put a plan in place with no new premiums and no surprises. So you can see, just by doing that 1035 exchange, every dollar is a full dollar and tax-free if used for long-term care. Now, that's not only the past growth on the gain in the contract, that's future growth as well. This is still an annuity. A PPA annuity is still an annuity. So it's still going to be growing over the time that they are not using that. So just recognize this is a great way, great solution for you to be working with your clientele. Now, I get questions around that a lot. Okay, so what is my client then giving up? If I'm going to move them from the existing annuity that I have to a PPA annuity, what are they losing in return? Well, let's kind of compare and contrast that. So there are existing annuities in that middle column. The last column is a Pension Protection Act qualifying annuity. So there's still tax deferred growth in both, right? Great. Account value growth, certainly going to continue to grow. Account value access, same thing, 10% free withdrawals on a PPA annuity, just like the existing annuity. What if they don't use it? Let's skip to the very bottom there. And they never use it for long-term care services. Well, it's going to be passed on to their beneficiaries, just like if they would have left it in that existing annuity. But there are three main benefits that they're going to gain by doing this as well. One, all the tax efficiencies of utilizing that non-qualified annuity. Moving it over to a Pension Protection Act, it's all tax-free for any LTC services. We've also got the ability to add a spouse. So once you understand the tax advantages and tax efficiency and start working with your clients, showing them a great tax mitigation strategy, once they understand that, they want to maximize the tax savings any way they can. So why not add a spouse to that same plan? Now, anytime you're 1035 exchanging, you know we must follow like for like rules. Many of these non-qualified annuities out there are singly owned. However, what we do is move that to a singly owned contract, to a PPA annuity, still singly owned, but we can add an eligible spouse, an eligible person. It must be their spouse, but now they have access to all the funds in that annuity as well. So a great way to maximize the tax efficiency here. And then every policy here at One America come with our claims concierge service. And again, I'll give you some more of that in just a moment. So can my client qualify? I know you don't like to deal with underwriting. I don't either. I've spent 23 years of my career in long-term care planning, and underwriting has always been one of those kind of bane of my existence, if you will, the policy prevention area, if you will. But premiums can also be one that really is a hindrance. So I'm looking at a great solution here where you can put something in play with no surprises, because here is your knockout questions. We've got 4 of them. I know there's 5 on the slide, but let me just kind of talk through that. So can your client qualify? Well, the first 3 of these 4 questions that we're going to ask, if you do this through our e-app, so another reason, again, to use an e-app versus a paper app, we're only going to ask 4 knockout questions. So the first 4 questions that are up there. The first 3 of those are basically saying, hey, are you receiving care today? So I'll walk through those. The first one, are they currently using any mechanical devices? Wheelchair, walker, quad cane, oxygen, motorized scooter. You can see those items there. If we answer no, let's move on. Do they currently need any help with any of their activities of daily living? That is a trigger on any long-term care policies, and that's where that IRC, the IRS code 7702B comes into play. So this is also now your underwriting question. No, they don't need help with that. Okay, great. Let's move on. We've got 2 of the 4 that we need. The third one, do they currently have any of the biggie conditions, if you will? Alzheimer's, dementia, Parkinson's, Lou Gehrig's disease, multiple sclerosis, memory loss, things of that nature. So these are the big conditions, obviously, that are saying, hey, we're going to buy a claim. You can't do that as an insurance carrier. So that's got to be a knockout question. So can you see how many of your clients today could easily answer no to those 3 questions, right? If they can, we're going to move on to the 4th question. And this is the last knockout that we would do if we do this through our e-app. And that says, do they have AIDS or AIDS-related disorders? That's it. You can give your client these questions up front and say, can you truthfully answer no to these 4 questions? Well, then I know you're going to be instantly approved if we do this through the One America e-app. So we can simply create a plan with no surprises. There's no background underwriting going on, no script checks, no MIB checks, none of that. It's instantly approved once they answer these 4 questions no. So no surprises, right? And if we're 1035 exchanging an existing annuity, then there's no premiums as well. What a great solution for helping your clients. 1, mitigate taxes, and 2, put a long-term care plan or extended care plan in place for them. Now you'll see there is a 5th question here that will be asked on the e-app as well. However, we don't use it for underwriting purposes. So they could be yes or no on that. But I'm going to come back to that 5th question here in just a minute. That fifth question does say, have they ever or currently receiving Social Security disability income benefits? So again, EAP, we're only going to use the first 4 for underwriting purposes, so you can know, again, going into any conversation with your clients, whether they're going to qualify or not. Really like this very simple, easy process. Now, I told you a little bit about this earlier, but I like to just illustrate it as well. So this eligible person provision, we follow the like-for-like rules when we're doing a 1035 exchange. If it's singly owned, we still 1035 exchange it, and it's still singly owned. But we add this eligible person. And again, it must be their spouse. But now they both have to answer those questions. They both have to answer no to those 4 questions. But if they can, we can add the spouse and get joint access to even that singly owned annuity. So a great way to put a plan in place and maximize the tax efficiencies, if you will. So let me give you a quick case study here. So here's a female age 77. I'm going to use our indexed annuity care strategy. And as a matter of fact, we used a 100% point-to-point participating for these values, if you will. Indexing, we're basing it on the S&P 500. We've got 5 strategies, your annual, caps and pars, and then a fixed income. This one happened to put 100% into the point-to-point participating, if you will. So what we're doing here is we're taking the original 200,000 that this female age 77 had in an existing non-qualified annuity. We 1035 exchange that. And then what we're showing here is what happens after year 1 of growth. So after year 1 of growth, within that indexed annuity solution, her monthly benefit, I think it started out at 8,500 or something like that. So after 1 year, it's already grown to 8,848, right? So great benefit here, if you will, starting right out of the gate, so to speak. That 200,000 has already grown over 10,000 in just 1 year. So you can see the account value or death benefit. So any of the remainder that doesn't get used gets passed on to that named beneficiary. But we're also giving more in the total LTC value. Our indexed annuity care has a crediting strategy that's internal, that basically acts like a step up or an inflation rider. So we're actually giving more in the total LTC value. So you can see that that's 212 or over 212,000 for the total LTC value. But let's look at year 10. Now, yes, she's 77, but if she can qualify at 77, likely she's probably going to live till she's 87. So let's just look at what the growth is over that time. Because I like to say, remember, these are still going to grow. So her monthly benefit after 10 years of growth is now over 16,000 as a monthly, every month, LTC benefit available for her. Now, let me stop there for just a minute. Let's say that she does go on claim. We'll call her, 87, 88, whatever the case may be. And she starts taking money out of her annuity here, her long-term care plan. What happens is she's only receiving, let's call it 12,000 per month in care. We are a reimbursement company. We'll reimburse up to the maximum amount. The maximum amount you can see here is 16,476, but she's only taking out 12,000, or that's the only care that she would need. What happens that elongates that pool? She doesn't lose it. It just stays in the pool for future monthly use. So really, the indexed annuity care really pays out over a 24-month period. However, so that's the calculation that we use. If you're wondering how we get to this monthly LTC benefit, we basically take the account value that is there, and really it's the total LTC value, and divide it by 20. So that's how you're getting your monthly benefit amount. But remember, if they don't need all of that, it stays in the pool, can elongate this plan versus, longer than certainly the 24 months that we're doing the calculation for. But then look at how much this has grown in value just in the actual death benefit itself, if not used, from 200,000 over 10 years to now 359. Some great growth there, right? And then look at the total LTC value. We're nearly $400,000 after 10 years of growth in this solution. So remember, using this via our e-app, you can know upfront that they're going to qualify, right? You can show them the questions, say, can you truthfully answer no to them? You're going to get instant approval done through the e-app, all tax-free for long-term care. It's got that guaranteed step up and that 50% free withdrawals for LTC. So we call that our base only strategy. So just doing a simple 1035 from the existing non-qualified annuity into a base only solution with us. And like I said, I prefer the index solution, which is why I kind of showed that example there. But remember, all of the benefits are tax-free for long-term care. You can add an eligible person, their spouse, to really maximize the tax efficiencies. They get access to the care benefit concierge. And again, I'm still, hang on with me just a little bit longer. I'll talk about that even further in depth. They'll get instant approval all the way up to $1 million. We'll do these. So we've seen, annuities worth, 3.5 billion, excuse me, 3.5 million. I'm sorry, 3.5 million. We'll take partials. So we'll do it all the way up to $1 million with this exchange, just to maximize the tax efficiencies. So any amount up to $1 million we will do. Again, using the e-app, it's the instant approval. If they can answer no, we'll go all the way up to age 85 with no comp reductions. However, we can actually go up to age 87 on these base exchanges. Now, there is a slight reduction in commissions for 86 and 87-year-olds, but still, I mean, we have very little time to use that money. Obviously, that's where the commission reduction comes into play, but what a great way to work with your clientele. You could actually go back to your own book of business and look and just say, okay, what clients of mine have these non-qualified annuities, and just look from ages 70 up to 87 and say, you know what, I need to give them a call and talk about this tax efficient distribution. So really affording them the tax efficiencies. So it's a great way to solidify those clients even further by now showing them a way to get those benefits of those annuities that you've been working with them for so many years and growing that amount to make it now tax efficient distribution. All right, so you want more leverage. I really wanted to focus on that base only opportunity because I think that is a huge opportunity for you out there. But if you want more leverage, we do have in our annuity suite more leverage that you can add. It just comes with some additional underwriting. Now, first and foremost, if you're going to add what we call our continuation of benefits rider, and you'll see here the concept of annuities, so still the base annuity, whether they did that with a single deposit or a 1035 exchange, that's their asset, right? That's their annuity, but that's what we're going to use first when the claims arise. So we'll use the cash value out of that annuity. At the time of application, if they want further leverage, we can add what we call a continuation of benefits rider. And that could be a limited amount of time, or like I talked about early on, a lifetime structure payout so that they would never run out of any funds for any long-term care services. So we've got a great way to really access this, but that comes with a little extra underwriting. And here's where that comes into play. So remember that fifth question that I talked about? In the base only strategy, it'll be asked, but we're not using it for underwriting purposes. But when you're adding the continuation of benefits riders, you will have that fifth question be a knockout. So they can't have any in the past or currently receiving any Social Security disability benefits. And then we're also going to do a telephone verification, telephone interview. And really that consists of the senior assessment. So we're testing their cognitive abilities, right? So that's where your extra underwriting comes in. So you're going to have that fifth knockout question. You're going to have the senior assessment, that telephone verification portion. And then we will do a script check and an MIB check behind the scenes. So a little extra underwriting can get you some extra leverage. Well, let me talk about annuity care 2. And that's really what I mentioned early on when talking about these, that this is a great leverage solution. Very simple to explain, and here's what we're going to talk about. Whether that's a single premium, so that single deposit of $200,000 in this example, or it was a 1035 exchange, doesn't really matter, right? But here's a female age 65. We've got $200,000 that we are using for this solution. Because of her age, with the Annuity Care 2 solution, this is the only one that we've got the continuation of benefit rider built in. And that's where your leverage play really comes into play. So we do that based on their ages. So from clients that are 40 up through age 69, we're going to leverage that 200,000 in this particular example 4 times. So we're going to give them an extra 600,000 in the continuation of benefits rider. So now she has an $800,000 pool to draw from. So we're going to leverage that 4 times because she's within ages 40 to 69. We actually go up to age 80 in this solution. So from 70 to 80, it's only 2.5 times leverage. Again, not as much time to use the money, makes sense for a little bit of reduction, but that's still great leverage, right? So look what this really afforded this individual here. $83.33 per month in a long-term care benefit for 8 years. So what a great leverage solution that's out there. But again, this comes with the extra underwriting. I will strongly suggest that you use our pre-underwriting inquiries for any of these types of solutions. Get them to our underwriting inbox, and I'll say I've never seen an underwriting inbox turn around so quickly. We promise 24 hours. Likely you're going to see it in less than 2. So I would strongly encourage you to do that, because once we get a decline, we can't go back and say, well, hey, let's just do that base only structure, right? That we talked about early on. The underwriters have put it this way: we can't unsee something that has come in. So if you know there's questions, I would just do this great base only exchange solution. But if you wanted that extra leverage, just utilize our great underwriting tools as well. Now, I keep promising you that I'm going to talk about the Care Benefit Concierge, and this is a great service. And many times, this is the thing that will solidify that sale, because these individuals that you're talking to, your clients, they don't know, what the best place to go receive care is, or who's, going to be eligible to come into their home if they want to receive care at home. Really, our Care Benefit Concierge is just one phone call away. These are all nurses in Indianapolis. And just to make sure that you understand what I'm talking about there, we are not shipping our claims across an ocean somewhere. So our claims are still handled in Indianapolis, where our home office is. So no language barriers, no huge time differences, that sort of thing. So we get a ton of great feedback around our claims concierge program. And really, it just starts with one call, or they can even go online and kind of initiate the claim. They'll sign and submit all the forms that we would need, but then the claims benefit concierge can handle all of this stuff kind of behind the scenes, answer questions, help with paperwork, contact doctors, providers, policy review, contact the care providers to finalize those details, do a lot of that work. So really, the family can focus on just providing that love and attention for that one who needs care. So a great claims process here that I wanted to quickly talk to you about. Now, it's time for questions. So I'm going to do this really quick and say, Tim, can we open it up, or Jake, if you're running that, can we open it up for any questions that happen to be out there? But we've got a great resource page. So I want to put this up. If you want some more information around that, you can scan that QR code with your phone, and then let's just take any questions that may happen to be out there.
Awesome. Well, hey, thank you, Brent. Appreciate all of that great information here. So we do have a couple minutes available for questions. We've got a couple here, but if you've got one, go ahead and send it on over here. The first one is can we get a copy of the Gallup poll?
Oh, yes. As a matter of fact, I will do this. Tim, I'm going to send you out the information on that. And we've also done some consumer studies around that. I'll include those as well.
Fantastic. And then what we'll do is we'll go ahead and include that out with our follow-up email and the replay of this to everybody there. So thank you for that question. Got another one here is, will this count if the client is going through a spin down? I'm seeing if there's any more. I don't know if I fully understand that question. So to the agent who asked that, I'll give, unless you know what that's referencing, Brent.
Well, yeah, I'm gonna take a stab at it here at least. So if they're going through a spin down, they are trying to qualify for Medicaid. So
yeah, Medicaid spin down is what she was talking about. Sorry,
yeah,
Brent. Go ahead.
Yeah. So I'm you know, if they're qualifying for Medicaid, this would not count towards that qualification, because this is really putting a plan in place for that. Whereas Medicaid spin down is just to go lose all control, if you will, and be a you know, wherever the state is going to put you, if you will.
Gotcha. I'm going to go ahead and launch our last poll here while we answer another question. That poll is, would you like more information about One America and their long-term care solutions? This next question that I have for us, Brent, is how do we get illustrations? And I'll go ahead and take that one. Jake Brunton and Tim Watts like the light bulb. Unless you already have an annuity sales director over here at IAMS, just reach out to us. We're on that topic, actually. I had an agent out in California, and we were working several different possible solutions here with One America. I do want to mention that One America has individual internal sales teams that are split up by the region where they're at in the nation. And the very nice thing about this is if you're having a seminar or a workshop, they might be able to swing through there and help you out with part of the presentation. So that's great resources. They're also available to hop on a Zoom call or a quick call and go over the illustrations and make sure that all of the questions are answered. So if you do want some individual help, or if you're open to having one of the One America sales reps swing through your office, definitely let us know. But to answer your question directly, and I'm going to go ahead and end this poll because I've been yapping here. To answer your question directly on the illustrations, just reach out to us over here at IAMS and we can get you taken care of. Brent, I do believe that that is the end of the questions here, and we're actually pushed up right on time. So one thing that I'm going to just say here, and then I'll turn it over to Brent for any final comments is, guys, this product is approved in a ton of states. It takes both qualified and non-qualified funds. We can make this as simplified or as unique to your client-specific long-term care needs as needed, right? So we can go anywhere from your simple generic rider, the base rider, to lifetime, right? And again, by you being able to do joints and singles, there's lots of different flexibility here, but also just the base straightforward solution, I think, is where I would start. And then just take a look at your client list and see, you know, maybe there's some older clients out there that could really benefit. They're no longer insurable, but they can't answer those 4 easy underwriting questions. You know, start there and then build out from there. But Brent, I'm going to turn it over to you for any last minute comments here.
Well, thank you, Tim. I think you did a great job of recapping kind of what I would say. Just look through their portfolio, look for those 70 to 87-year-olds, and really do them a big service for their clients. Put a tax mitigation strategy in place, create a long-term care plan with no new premiums and no surprises.
Awesome, Brent, Jake, I appreciate it, gentlemen. Everybody who attended today, thank you very much. Have a great day. Bye now.
Thank you all.